Good morning, students. Welcome back. So today we'll start with this new topic and this new chapter. Let me just share this document quickly with you. Right. So now, if you look at the requirements, okay, so I understand this is quite an important chapter for you because even though it appears to be one chapter, but it comprises of various auditing standards. Okay, and if you look at SA 240, which talks about fraud, okay, the aspects related to fraud as to how they are dealt by the auditor, then the considerations of laws and regulations, again a very critical area in relation to audit of financial statements of any entity. Then this communication with those charged with governance, okay, TCWG, which is very commonly called as TCWG. Now this is again one area which is of significant importance. And these days, in particular, there's a lot of noise on this. Why? Because it's been felt that the communication between the auditor and TCWG has not been the one which is required. Okay. So it is not really at the required levels. So that's why this is something which needs to be focused upon, which needs to reach to a level where it should ideally be, right? And only then the audit process, or you can say this entire audit, can become effective. So that's why this is again a very important topic and very important discussion that we need to have, right? Okay. And of course, then we have these two other auditing standards on joint audit and this third party service provider for an entity as to how that is required to be audited. Now, all of these topics are quite important from examination perspective as well in terms of the weightage that you can just check. Yeah. Now, moving on to SA 240. So I'll just start with this SA 240 to begin with. Okay. Now, when it comes to audit, now what is the objective of the auditor? Objective of the auditor is to ensure that the financial statements are free from material misstatement. Yes or no? Now, what is this misstatement? Now, this misstatement means any mistake, okay, or any error which is there in the financial statements, right? Now, if you look at that error, there are two ways an error may arise. Now, what are those two ways? So if I go to that sheet, okay, which we generally use. All right, so now we are talking about an error. Which is what you call as misstatement. Now, there are two ways you can have this. It can either be intentional or unintentional. Now, does it really matter for the auditor? The answer is no. Why? Because both the types of misstatements are required to be looked at. The important thing is that he'll focus upon the material one. But when we talk about this particular category, intentional one, actually, this is nothing but a fraud. Yes or no? Actually, what is this? This is fraud in the financial statements. And because it's intentional, so that's why what will happen? Maybe some of the employees are involved in this in terms of committing a fraud in the organization. Or when you talk about those employees, see, those employees could also be the senior management. Those employees could also be the top management. Yeah. That is where this problem significantly, this becomes significantly important. Why? Because this may lead to a significant error, or you can say significant misstatement, and which may also become hard to detect. Why? Because if the management in itself is involved in this, okay, so then it's not going to be easy for the auditor to find out if at all there is any such misstatement or not. Yes or no? Yeah. So now, what is our objective as an auditor? Our objective is to assess any risk of misstatement. Correct? Now the auditor will want to assess the risk around it. And this risk, therefore, will be around both of these types of errors, whether it's intentional or unintentional. So now, unintentional is not the one that we are talking about. So we are currently talking about this intentional one. Okay, so that's why when it comes to the assessment of risk of material misstatement, so it can also be the one which is related to fraud. And that's why some of the areas wherein the fraud risk may happen, so that is what the auditor will always consider in his audit planning. That will also be a part of the audit strategy, or you can say the audit procedures which the auditor plans to perform. Correct? Okay, so now we are discussing about this fraud aspect. Okay, as to how to deal with this. What to do in case you have this, right? What are the safeguards? And of course, what are the planned procedures in relation to this? Okay. Now, first of all, it becomes important for us to understand as to how this fraud may arise. So we have understood as to what a fraud is. It's something which is an intentional mistake. Correct? Now, see, the way we can look at the fraud in the financial statements could be of two types. One, we can say the fraud relates to the financial reporting. What does it mean? Means the financial reporting is not appropriate. And that has been done intentionally, right? To say that financial reporting is not appropriate and that is unintentional, of course, many a times, in fact, a lot of times you will come across that situation. But to say that the financial reporting is not appropriate and that is intentional, that is what you call as fraud. Okay. So we can say the one which is related to fraudulent financial reporting. And what is the other one? Other one is in relation to misappropriation of assets. Right? So let's try to understand about both of these things as to what a fraudulent financial reporting would be and what do we have in this misappropriation of assets. Okay, so we'll continue on this. So fraudulent financial reporting. Now, what do we have in case of fraudulent financial reporting? And the other one is misappropriation of assets. Correct. If let's suppose entity plans to inflate the profits. Now, some of the companies which are listed, okay, so they will have an inclination towards showing more profits, higher profits, okay, which are not actual. Why? Because they want to have this aspect related to the public expectation. Okay, so therein, what can they do? They can make some adjustments in the financial statements through which the profits can be increased. Right? Similarly, there could be one category of companies who would like to show lower profits. One category wants to show higher profits, other category could be there which wants to show lower profits. And why is that? Because they want to cut down on their taxes, they want to save taxes. Okay. Yeah, so actually it's not a saving of tax, so that's how they want to not really pay the tax. Okay, so they want to cut down on the tax amount, right? And that's why there again you may find some adjustments in the financial statements. And when that is intentionally done, so that is what is impacting the financial reporting of the company. Okay, and that is what you call as fraudulent financial reporting. Correct? Yeah. Now, in relation to fraudulent financial reporting, let's try to understand as to what are the ways, what are the things which the company may want to put in place. Okay, maybe to increase the profits, decrease the profits, or it's not only around the profit. Maybe the company wants to show higher sales. Okay. So now in this case, what can happen? Let's suppose if we were to take an example. So what are the ways company can do this? Let's suppose we are talking about financial year 24-25, right? So 24-25 happens to be the reporting year. Now in this case, what the company can do is see the sales of first few weeks of the next financial year can be booked in the financial year 24-25. So thereby what will happen? They will be able to increase the sales. Plus they will also be able to increase the profits. Yes or no? So you can say this is one of the ways. Similarly, if you look at it other way around, let's suppose a company wants to show lower profits. So what they can do is sales of the last few weeks, or maybe the last week, or maybe the last 2 to 3 days can be moved to the next financial year. Correct? Yeah. So this is just an example. Okay. Now, in both these cases that we have discussed, can we say that the financial reporting is correct? No, it's misstated. And it's something which is intentionally done. And that's why it's called as fraudulent financial reporting. And there can be a lot of other examples for this as to how this can be achieved. Yes or no? Right? Now, let's talk about this other category, misappropriation of assets. Okay, let's discuss this as to what do we have in respect of this misappropriation of assets. Now, in this category, misappropriation of assets, a very common example can be the cash embezzlement. Right? So now we are talking about the assets of the company. Okay. So any asset, if let's suppose you look at the assets which are stolen. So where will you find that? See, if you look at a company, if you look at its assets, generally the fraud which the employees will be committing, that will not be in respect of, you can say, big assets. For example, plant and machinery, building. So you will not find that an employee has taken away plant and machinery, employee has taken away any sort of building. No, that you will generally find in respect of small value assets or small assets. Yeah, because that is something which is easy. Okay, or you can say that is where the opportunity will lie. In respect of big assets, it's not something easy, or you can say that is where the opportunity doesn't lie. Correct? Yeah. So now with this, we need to understand one more aspect. And what is that? That is about the way this fraud may be committed. Okay. Now for this fraud to be committed, what do we need? We need to consider some more factors. So let's talk about risk assessment which the auditor should have in respect of fraud. Okay. Now, whether it's the fraudulent financial reporting or it's the misappropriation of assets, the question arises, why would it take place? Yes or no? So we can say there should be an opportunity, or there must be an opportunity which will lead to the fraud. What is that? See, the controls are not there in the system. Or you may say the controls are weak. Right? So if the controls are weak, what will happen? What will happen? Any of these types of misstatements may arise. Okay? Any of these types of misstatements might be there which are not detected by the entity itself. Forget the auditor. Yeah, because the auditor will be coming in later. It's the management which needs to look into it first. Correct? Yeah. So that's why to have an internal control system operating effectively and to have a strong internal control system is very important. Yes or no? Yeah. Now, if let's suppose the management, the top management is not focused about this at all. Okay. So they are not really interested or not really want these things to be implemented. Means in terms of having a strong system, or maybe even if the system is in place, but that is only documented, that is not operating effectively. So does it really help? Answer is no. So that's why the focus of the top management is again very important, right? So that will only help the organization if that is missing. So what will the employees think, or what will the employees find? So they will look at it as an opportunity. Why? Because they understand that nobody is really bothered about it. Nobody is really interested into this. Yeah. So that's why they may be looking at it as an opportunity to commit a fraud. Okay. Or if let's suppose it's the one which is related to financial reporting. So what may happen? See, the accounting policies which the company may be following may be inappropriate, right? So they may not be aligned with what the accounting standard requires. They may not be aligned with what the industry is doing. Or maybe the entity is following something which is not getting disclosed in the financial statements in an appropriate manner. Yes or no? So if the disclosure is missing, there's always a window available for the management to report something in an appropriate manner, because that becomes very hard for anyone to detect. Correct. So we can say for fraud to happen, an opportunity must be there. So if the organization will create an opportunity, that is when the fraud can happen. Otherwise, it may happen, but it will be very difficult. If the opportunity exists, that is when it becomes easy. Okay. Now, the other situation could be incentives. Now, what does it mean? Many a times, what may happen is, see, the bonus, or at times the payout of the employees of the company. For example, if you talk about marketing team in an organization, if you look at the top management in particular, their salaries, a portion of their salaries, and in fact the bonuses, they are linked to the financial performance of the company. Okay. So if the financial performance will be good, they will be paid higher. If that is not so good, they will lose out on that. Correct? They will lose out on that. Right? So in this case, what will happen? The management will be inclined to show higher profits. Why? Because their salaries, their compensation is linked to that. Yeah, so there's always an incentive which is available to the management. Therefore, to report higher profits, for example, or to report higher sales. And that is where they may look for opportunities. Okay, so that they can sort of, make those mistakes or make those adjustments in the financial statements to achieve this. Sometimes what may also happen is, you can say there could be some behavioral aspects. Okay. Sometimes some of the employees may feel very dissatisfied. Why? Because if they are not paid well, okay, or if they are not treated in an appropriate manner in an organization, so what they can do is they may resort to some of these things in terms of committing a fraud. Okay. Or maybe because the upper management or maybe the senior management is found doing such things in the organization, so that's why the employees, or you can say the lower management, or the employees who are there in the organization, they may also think that this is what the senior management is doing, so what is the problem if we are doing the same thing? Yeah, so which is more of a behavioral aspect, which is more about a culture which they see, right? And if let's suppose a client, if let's suppose an employee is frustrated in terms of doing something, or in terms of the way he is doing something, but is not really happy the way he is treated in the organization, or she is treated in the organization, there again they may resort to some of these things. Correct. Now, all of these things become important, first of all, for the management or the entity to look into. Why? Because that is where the risk will start. Yes or no? Yeah. So that's why it's very important to focus upon this area. If it is focused upon, and that's why you will be able to get on to the solution to this. Otherwise, it will remain uh, sort of difficult for anyone to capture this, right? Now, in relation to this fraud risk, now what are the factors you may see, right? So let's try to understand some of these factors which could be there. So one is the factors related to business risks. Okay, so these things we have already talked about, but let's try to understand, because this is a very important aspect on the part of the auditor, and that is what you call as risk assessment. See, if the risk assessment is not appropriate, what will happen? Auditor will not be able to plan the audit procedures accordingly. Yeah, so that's why this is the most important part for the auditor. Okay, cultural issues like absence of anti-fraud policy and culture. Okay, if you look at the organization, they have a history of legal or regulatory violations. So that is where you will find this. There are dissatisfied employees who have access to desirable assets. Okay, so if the employee is not happy and you have given them the access, so there's always an opportunity available to them to get into the fraud. Okay, lack of job segregation and independent checking of key transactions. Now, this is again very important to have this system in place. Now, what are the financial risks? If you find that the management compensation is highly dependent on meeting aggressive targets. Now, what do you mean by aggressive targets? Which are very difficult to be achieved. Okay, and that's where they may be looking at the ways to commit the fraud. If there are significant pressures on the management to obtain additional finance, you find that the profits are not stable. Okay, sometimes the profits go up, sometimes you find them that they are going down, right? Then the risks could be there related to data, information technology system. In that case, what do you find? Unauthorized access to the systems by employees or external attackers. See, this is again a very basic ingredient in terms of the controls. If let's suppose that is not available, anyone can have access to any type of data within the organization. Okay. So that is where the problem may arise. If there is unauthorized electronic transfer of funds or other assets, now that's where most of the times fraud is found to have taken place. Most of the times. Okay, right? Some of the external risks which may be looked at. If let's suppose there is an introduction of new accounting or other regulatory requirements. Now, because of that, one may try to look at the opportunity which is there to commit a fraud. Okay, which see, some of these things you'll generally find in relation to financial reporting. Okay, if let's suppose there are highly competitive market conditions and decreasing profitability levels. If let's suppose the organization is operating in a declining business sector, right? Okay, now these risks become important for the purposes of planning the audit procedures. Now, when it comes to the fraud risk, there are a couple of areas in relation to every financial statements which are considered to be fraud risks. What does it mean? That you'll always have fraud in that? No. Means it's a presumed fraud risk. Means there's always a risk that fraud may be committed. Okay. Now, if you look at the financial statements, for example, it will have a lot of items. It will have assets, liabilities, various types of expenses, income. A lot of disclosures will be there. But there are a couple of areas in that which are so significant and which are so prone to this type of misstatement that it is always required by the auditor to presume fraud risk is there. So that's why in relation to these two areas, revenue recognition and management override of controls, auditor will not think whether there is a fraud risk or not. Auditor will have to presume this. Okay. Yeah. So it's sort of presumed. And because it's presumed, so that's why auditor will have to plan his or audit procedures accordingly in respect of these two areas. But other than these two areas, auditor will have to evaluate. Now, one cannot say that if these two areas have been picked up as the fraud risk areas, so that's why it's good enough. And that's why one should not really look at anything beyond that. No, that will again be inappropriate. Okay. That is not something one should do. These are the two which are coming in by default. Other than that, there could be other fraud risk areas, or there may not be any other fraud risk area, but that is something which will require evaluation. Now, what could be the examples for that? So we can say the related party transactions could again be one of the areas wherein you find problems. Okay, again, a very important area as far as the financial statements are concerned. Okay, wherein again, depending on the type of structure which the organization will have, depending upon the types of related party relationships and the number of related parties which the organization is having, it should do this assessment, okay, in relation to whether a fraud risk is there or not. Then the other area which you generally find to be problematic, okay, particularly the one from the perspective of fraud risk, is about the litigations, right? So that's about the litigations. Now, in relation to the litigations, one needs to understand that the nature of the matter, okay, as to what the matter is, what does it relate to, are there any aspects which can lead to the fraud risk in that, and accordingly, those matters need to be evaluated by the auditor, right? Now, why is this important? See, this is important because the moment you say that there is a fraud risk, so what will happen? That becomes a significant risk for the auditor. Yes or no? And what will lead to this fraud significant risk? Extent of testing will be higher. Yes, these days when it comes to the audit, what's the approach? It's the risk-based audit. Means the areas where the auditor will find the risk to be higher, the auditor will want to focus more on that in terms of performing the audit procedures. That doesn't mean auditor will check more of samples. No. See, the entire testing, the entire audit of those particular areas, okay, may require a different set of procedures. To say that the samples will be higher may not be appropriate. But of course, one can say the focus will be more, and somewhere the procedures will definitely be more. Right? So that's why when it comes to the fraud risk, it becomes important for the auditor to consider all of these requirements. Correct? Yeah. Now, some of the events which could be indicative of this. Many a times in relation to the inventory which is there in the organization, what do you find? You find the physical verification has been performed and there's a shortage. Okay. And generally, do you come across variations when a physical verification is performed? Yes, generally you find that to be in excess or in shortage. Yeah, so that's a very common thing. But if you find that the inventory has gone down significantly, okay, so that could be one area for the auditor to look into as to what are the reasons for that. For the management, again, to look into. If let's suppose it's quite common that the documents are missing. Yeah, so maybe some of the important documents are generally not found. Why? Because intentionally those are removed. So that is also one of the factors for the management to consider, for the auditors to consider, as to what is the reason why those documents are not been found. Okay. Or even if the documents were there and now they are not being found, so what is the reason for that? Yes or no? Then, as around the duplicate payments. Now, this is again one of the ways you find the fraud being committed. Okay, maybe to a single party, a payment has been made twice intentionally. Okay. If you look at the complaints, so what do you find? There are frequent and repeated complaints in relation to a particular matter, in relation to a particular employee, in relation to a particular department. Yeah. So some of these things become important, or you can say they might be indicating that the fraud is being committed. Okay, so that is where the attention is required. So then I think, as around this misappropriation of assets, fraudulent financial reporting, we have talked about it as to what are the examples, what are the ways you may have these types of frauds. So if you look at theft of cash, okay, fraud in relation to the check, if let's suppose there's a misusage of accounts, okay, inventory and PPE theft, as we talked about it, that for inventory it's quite common. For PPE, you'll not find this for large items, big items. You'll find this for small items. For example, laptops, for example, maybe a mouse, okay, some of the material related to printing and stationery. Okay. For big assets, it's not easy. Procurement related frauds, again, it's very common. Yeah. So somewhere in the procurement, it's being done. Fictitious employees. So actually, there are no employees in the organization who are being paid. Okay, let's suppose organization has got 200 employees, but the salary is being paid for 225. So 25 do not exist, which are also called as ghost employees. Again, a very common type of fraud. Okay, or maybe sales are fictitious. Okay, fixed assets, PPE, are fictitious. Capitalization is not proper. Why? Because an item which should have been expensed off is capitalized. What is the objective? Objective is to cut down on expenses. So if you capitalize it, of course, it will move to the expense in the form of depreciation charge, but that will be over a period of time. So you have delayed the reporting of expense in a way. Okay. Why? Because your objective is to increase the profits. Okay. Or maybe some of the expenses are there which should have been provided, but the provisions are not appropriate. Okay. So what do you find? There's an under provisioning. Yeah. So what do you find? This under provisioning. So that is also one of the problems which you may find. Okay. Then next thing, it could be in relation to the bribery, okay, or conflicts of interest. So which are more of related to the systems problem in the organization. Correct. Now, what are going to be the planned audit procedures? So if the auditor will plan it, what are the procedures auditor should plan? The ways the auditor should be looking at it. See, there is no doubt that the fraud risk is critical, is important, but it's not easy for the auditor to detect that. Yes or no? Why? Because it's done in an intentional manner. See, something which is intentional will not be easy for anyone to detect. Why? Because the other person who is committing that would have thought through the ways to hide that. And if the other person happens to be a part of the system, so that person will also know the ways through which it can be tracked. Okay. So that doesn't mean it can't be tracked. Of course, it can always be tracked, it can always be looked at, but it's not easy. So that's the thing one need to take care. Now, because of the challenges which are there, this will require a detailed assessment to begin with. You can say brainstorming sort of session is required in terms of the planning, wherein the senior members of the audit team should also be involved so that they can share their experiences, they can think through a bit more on the basis of their experiences as to what are the ways through which it can be tracked, and accordingly the audit procedures can also be planned. There are a couple of areas. One is the estimates, and second is the unusual transactions. Unusual means which you generally do not find, okay, which are one-off transactions. It is important for the auditor to focus on both these categories. Because something is unusual, so it should invite the attention of the auditor. Yes or no? It should invite the attention of the auditor to look into. It becomes important for the auditor to focus upon that, spend some more time on that. When we talk about estimates, so what are estimates? These days, when you look at the financial statements, there are a lot of items which are measured at fair value. What are those? Those are estimates. Now with estimate, there is a challenge. What is the challenge? That estimates require some sort of assumptions. Okay. So they are required to be computed based on assumptions. Why? Because you cannot have accuracy. Okay. You'll need some sort of approximation over there. And that's where estimates again is one area wherein the management, if it wants, it can manipulate the data, it can manipulate the information, it can manipulate the estimates. Okay, so therefore it's important for the auditor to do a proper assessment, okay, to audit this area, right? There's another area, or you can say there's another approach. I should not really call it as an area. There is another approach which the auditor needs to focus. That is about JE testing. Now, again, a very important procedure. So, if you remember, we talked about two risks which are presumed. One is revenue recognition. See, for revenue recognition, of course, the auditor will perform a lot of procedures. But let's talk about this management override of controls. It's a situation where the management is overriding its controls. And we have discussed that whenever the management is involved, management means the top management, the senior management is involved. And because they are setting up the controls, so if they override their own controls, okay, so it will be hard to detect. And that's where one of the procedures which is required to be applied and which is important and which is the way to track it happens to be what? JE testing. Okay. So in case of JE testing, what is it that the auditor intends to do? Auditor is looking at if there is any management override. So that's the intent while testing these J's. Okay, and this is required to be looked at through that approach only. Because we are not talking about any journal entry. We are talking about those journal entries wherein the override could be there. Okay, which appear to be fishy, which appear to be unusual. And that's where the auditor will have to first of all understand the process of the organization to find out if there is anything unusual or if something could be unusual in the system. Okay, let's take an example for this. In case of JE testing, what could be the problem? So let's suppose auditor is looking at the JVs which have been passed during the year. So there is one filter which the auditor can create on the basis of the understanding of the process of the organization. Now, if you look at the process, so the auditor has understood that the accounting entries are passed by the employees up to manager level only. Okay, so they will be passing the accounting entries. Means they will record the accounting entries. And any employee who is senior manager or above, they will not be involved in recording of transactions. They will only be they will only be involved in checking. Okay, so there's a maker checker concept. So one will record, other one will check. Now, in the JV dump, what the auditor can do is auditor can put a filter. Filter in terms of the journal entries wherein the recording is done by any level which is above the manager level. Okay. And if let's suppose there are few transactions which he comes across, so he can inquire the reasons for that as to why that has been done. What is the reason? Because as per the policies, as per the system of the organization, that shouldn't have been done. Yes or no? So what are the reasons as to why that was done? Okay, that's something which is important for the auditor to understand and track. Yes or no? Yeah, so this is again one area which the auditor can always look at, which can the auditor always consider. So similarly, there are various ways it can be done. Now let's talk about the reporting responsibilities. Now, see, if let's suppose the auditor will come across fraud, so there are some reporting requirements which have been placed upon the auditor. Now, what are those reporting requirements? One, auditor will have to evaluate in terms of the main audit report, first of all. Okay, whether in the main audit report such reporting should be given or not. Yeah, so that's one of the things for the auditor to look at. Okay, to begin with. Okay, means in the main audit report, whether such reporting should be given or not. Then you have this caro. Okay, so under caro, there is a specific requirement for the auditor to comment upon this. If there is any fraud which has taken place by or on the company. Yeah, so there again, it becomes important for the auditor to report this, right? So I can see this uh, response from Saminathan. He's saying that's clause number 11. Yes, very good, right? So that is again something which is important for the auditor to look at. Then there is also a reporting requirement under the Companies Act, okay, which is based on some criteria. So can you help me understand what is that criteria? Anyone quickly? So what is that criteria? Over to you. So there is a criteria which the auditor needs to follow in terms of the reporting. So what is that criteria? Quickly, huh? Okay, Swaminathan says the first report to TCWG within 2 days. Okay, what else? What else? First report will go to TCWG within 2 days. What else? Okay, then he says one needs to wait for 45 days. All right. So if there is no response, that is when you report to the central government within 15 days. Okay, so if there is no response, okay, so what do? Within 15 days, you will report it to the central government. But there is again a threshold for that. And what is that? 1 crore. Very good. So that's been quite helpful. And Saminathan says that's AGT 4, which needs to be considered here, right? That's AGT 4, which needs to be considered here, right? All right. So I think this is the process which one needs to consider, right? Okay. Now, there are some aspects related to this fraudulent reporting which needs to consider. Now, as regards this fraudulent reporting, it is very, very important to have the professional skepticism to be considered, right? Okay. So now what we will do is now we will just move on to the next topic, but I think we can just take a quick 5 minutes break and then we'll move on to the next topic, right? Manish, we can take a break for 5 minutes and then we'll continue. All right, so we have talked about, so sorry, this. So I think we have talked about fraud, right? And it's a very important topic, not only practically, but also theoretically for the purposes of our examination as well. Why? Because it's an important consideration as around the audit, right? So now we'll move on to the next topic and the next auditing standard, that is about consideration of laws and regulations. Now, if you look at the audit report, now let me just touch upon the audit report here. In the audit report, there is a section which talk about laws and regulations. Yes or no? And if you look at the financial statements, see, when you will look at it from the perspective of the management, so there are few considerations which are required in the financial statements. What is that? One, of course, is the accounting standard. Yes or no? But other than the accounting standard, there is one more consideration, and that is about laws and regulations. Okay, so anything which has a bearing as around the laws and regulations needs to be accounted for. Number one, which can have some financial impact, of course. Number two, if you look at the internal control systems or the systems which are there in the organization, they are also driven by the applicable laws and regulations. Okay, so that's where this aspect of the laws and regulation becomes important for the auditor to look at. Now, as we discussed that financial statements happens to be the responsibility of the management. Okay. Financial reporting happens to be the responsibility of management. So that's why who will be looking into it? Of course, it will be the management to begin with. Yeah. So as around the compliance with various laws and regulations which are applicable to the entity. Okay. So who will be looking at it? It's the management, of course. And they need to have a system in place. They need to have the policies and procedures in place so that there's no non-compliance as far as any law or regulation is concerned. Yeah, so what can they do about it? So one is the monitoring of legal requirements, ensuring operating procedures are designed to meet these requirements. Yeah, ensuring employees are properly trained and understand the code of conduct. Now, this is again very important part. Why? Because eventually the organization is run by the employees, and if the employees are trained or if the employees are not trained, that will have a bearing on whether the entity is able to comply with the law and regulations or not. Because who is going to comply with that? It's the employees, and that's how the entity will also reach the compliance stage, or you can say will be looking at it whether it's compliant or not compliant. At times, you also see the entities engaging the legal advisors, okay, to assist in monitoring legal requirements. Right? Now, what are the responsibilities of the auditor? See, the auditor is there to look at the material misstatement. Okay. Now, any of the material misstatements to be detected for reasons. Like, what are the reasons? There are many laws and regulations relating principally two operating aspects of an entity that typically do not affect the financial statements and are not captured by the entity's information systems relevant to financial reporting. So that's one. Whether act constitutes non-compliance is ultimately a matter for legal documentation. So that's something which the auditor should also consider, right? Now, auditor will have to design the audit procedures so that some of these compliances or the non-compliances can also be looked at. See, the auditor is not there to ensure the compliance with each and every law with each. So there's no checklist which the auditor needs to sort of tick, 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 tick. Okay, that is not required by the auditor. But any non-compliance which is resulting into a misstatement in the financial statements, that is what the auditor needs to, or that is what the auditor needs to look at. Okay, understood? The way the auditor needs to approach this, correct? Now, any sort of non-compliance. So in this case, what should the auditor ideally do? Of course, to begin with, he needs to have an understanding of the system, of the processes. Only then he'll be able to find out the applicable laws and regulations. So, of course, the management must have considered the applicable laws and regulations, but if in case the management has missed out on that, how will the auditor get to know about it? Only when the auditor will understand the policies, the processes, right? And then he will be able to reach at the possible effects which could have been there. Now, in relation to the identified or suspected non-compliance, what should he do? Of course, the responsibility lies to report it to the appropriate authority, including TCWG, plus any non-compliance which is there, which can have the material impact to be reported in the report, or if there is any specific requirement to report it to the any authority. So that should also be required to be done. Correct? Right? Okay, now moving on to the next auditing standard. So what I'll do is I'll just quickly flip through some of these auditing standards. Okay. And then we'll pick up questions related to all of them in one go, right? So that's how we'll move on to this. So this TCWG I'll pick up slightly later. Let's talk about this joint audit. Okay. Now, what is this joint audit? What do we need to do in respect of this joint audit? So let's try to understand. Now, this is auditing standard 299, which talks about it. Okay. Now, what is a joint audit? Let's understand this point first. So here again, we are talking about audit of financial statements. Okay. But as the terminology suggests, in this case, we are talking about a situation wherein the audit is not performed by one auditor. It's two or more auditors who are involved in this. Okay. Now, what are the reasons why the management will want to do this? Or you can say, how does it really help the organization? Many a times, the size of the organization could be such that they want to divide the work. Okay, they believe that two or more auditors, if are there, they will be able to execute the work in a better manner within the given timelines. Many a times it's a regulatory mandate, means the regulation has mandated this. Okay. So there are definitely the advantages as well as disadvantages. Yeah, disadvantage will be now the company, if you look at it from the company's perspective, they will have to handle another team of auditors. Okay. There can always be a disconnect between the auditors who are there. Yeah. And in terms of reaching the conclusions, in terms of forming an opinion at times, not always, but at times it could be there because the way a matter is looked at by one auditor, the other auditor may have a different thought process on that. Okay. And of course, coordination is going to be a challenge in itself, which is not going to be easy at every point of time. So that's why an appropriate planning mechanism needs to be put in place. Okay, so the joint auditors should discuss and develop a joint audit plan. So what do they do in this case? They will identify the division of audit areas and the common audit areas. Some of the areas they will divide. Okay. Some they will keep common, okay, which is again dependent on the scope which the management will have with the joint auditors. Okay, right? So this is again very important so that there's no overlap, so that there's no confusion, and there's proper coordination. Okay. This responsibility and coordination among the joint auditors is extremely important. See, it is very important that nothing gets missed out. It should happen that after the work is done, maybe there is something in the financial statements which has not been looked at by any of the joint. Why? Because proper planning and work allocation was not there. So that's a risk. That situation should not arise. So all joint auditors should be jointly and severally responsible for audit work which is not divided amongst the joint auditors and is carried out by all joint auditors. Decisions taken by all the joint auditors under audit planning in respect of common audit areas. Matters which are brought to the notice of joint auditors by any one of them and on which there is an agreement among the joint auditors. Examining the financial statements of the entity complying with the requirements of relevant statutes. Presentation and disclosure of financial statements. Ensuring the audit report compliance with the requirements of relevant statutes. Okay, yeah. Next. Each joint auditor is entitled to assume that the other joint auditors have carried out their part of the audit work and the work has actually been performed in accordance with the auditing standards. Okay, so that's why the joint auditor will have this other matter paragraph wherein they will specify. Okay, so some part which has not been done by the joint auditor, sorry, that particular auditor, and which has been done by the other auditor. Okay. Moving further, talking about the next area, that is about audit considerations relating to an entity using a service organization. Now, what does it mean? So let's first of all understand about this. Say there's a company ABC Limited, correct? ABC Limited has outsourced its payroll to another company. What is that? PQR Limited. So PQR Limited for our purposes is a service organization. Why? Because it is rendering services in relation to a process of the organization. Now, we are looking at the audit of ABC Limited right now. Okay, so ABC Limited happens to be the client, which is subject to audit. We are not saying PQR will not be audited. PQR will also be audited. But as of now, we are talking about ABC. Now, in relation to ABC, whose process is outsourced. So if let's suppose there is an auditor of ABC, who is the auditor? Let's suppose P and Company. Say P and Company is the auditor of ABC. For the purposes of audit of ABC, is the audit of payroll required? Answer is yes. Correct. But this payroll as a system, as a process is outsourced. Yeah. So how will P and Company audit payroll? Okay, so that's the subject matter. Understood? That's the subject matter. So we are talking about service organization here, which is PQR, in relation to payroll process, which is required to be audited by the auditor of ABC. Okay. So see, broadly, we can say there are two ways P and Company can audit this. Either P and Company goes to PQR to audit this payroll. So where does this payroll lie? With PQR. Okay. So one way is very simple. Along with ABC, P and Company will also pick up PQR, okay, for the audit of payroll. So we are not talking about audit of PQR. We are talking about for the audit of this payroll, okay, in terms of the process, in terms of the controls. Yeah, because that's how P and Company will get comfort over the payroll. Because something which PQR will provide to ABC, ABC will record it as it is. Correct. So that's approach number one. Or you can say that's one way it can be done. What is the other way? Somebody must be auditing, looking at the systems of PQR. So let's suppose it's R and Company which is doing that. Yes or no? Yeah. So the other way is to look at the reports of this R and Company in respect of systems and processes of PQR. See, what is the objective here? Objective is not to audit the numbers. Yeah, please understand. If you look at the outcome, so that outcome is already recorded in the financial statements of ABC, for which the access is also available to P and Company. So as far as the information is concerned, is that a challenge for P and Company? No. So entire information, the numbers are available, the data is available, which is being provided by PQR. Okay, that is not a challenge. Yeah. So that's why idea is not to audit that. Idea is what? That the system which is generating that output, which is getting reflected in the financial statements of ABC, whether that system is working in an appropriate manner or not. Okay. What are the controls? What is the control system in respect of that generation of outcome? Or you can say, if I go by what Saminathan has explained, very good, system and control that are designed and implemented at the place of PQR. Yeah. So that's the objective. Okay. For P and company to look into. So how will that be achieved? So we discussed there are two ways you can achieve this. Correct. So this is what this auditing standard that we are going to discuss talks about. Right? So what is a service organization? We have just discussed about it. Who is the service auditor? Service auditor is an auditor who, at the request of service organization, provides an assurance report on the controls of service organization. Okay, so in our example, ABC is what you will call as user entity, if you want to relate to that. PQR will be called as service organization. Okay, auditor of ABC means P and company will be called as auditor of user entity or user auditor. R and company, okay, who is involved in respect of controls of PQR will be called as service auditor. Right? Yeah. So you can just relate to some of these terms. It will be great because that's how you will get complete clarity, because many a times I've seen this confusion around these terms only. Okay. Hopefully you're clear on this. Now, in this case, what is the objective? We just discussed. Objective is to reach that level. Now, there are two ways a report can be obtained. We can say there are two types of the reports which you will obtain. Type 1 report is a report that comprises a description prepared by management of service organization of the service organization system, control objectives, and related controls that have been designed and implemented as at a specified date, and a report by the service auditor with the objective of conveying reasonable assurance that includes the service auditor's opinion on the description of service organization system, control objectives and related controls, and suitability of design of controls to achieve the specified control objectives. Now, what is type 2? Type 2 is a report that comprises description prepared by management of organization, service organization, of the service organization system, control objectives, related controls, their design and implementation as at a specified date or throughout a specified period, and in some cases, their operating effectiveness throughout a specified period. So you can say it's the enhanced version. And a report by the service auditor with the objective of conveying reasonable assurance that includes service auditor's opinion on the description of service organization system, control objectives, related controls, suitability of the design of controls to achieve the control objectives, and operating effectiveness. Right? That was not there in type 1. Clear? A description of service auditor's test of controls and the results thereof. Okay? Yeah? So this part is important. So Saminathan has explained this. So he's saying if you look at type 1, you find only the system and control designed and implemented as at a specified date. But if you look at type 2, you also look at the operating effectiveness throughout the period. Yes or no? Okay. Now, as regards this entire process, so this will also involve same sort of procedures which any auditor will want to perform, which will be in relation to the understanding of the entity, okay, which will be in relation to the understanding of the processes, thereby to get an understanding of the control system, okay, which is applicable to the organization. So that's one. And of course, the idea is to then evaluate from the auditor's perspective. So now what are the steps? Step is to get onto this type 1 or type 2 report if that is available, because that is going to help the auditor. Okay. And contacting the service organization through the user entity to obtain specific information if at all that is required. Visiting the service organization and performing procedures that will provide the necessary information. Okay, many a times the user auditor may want that this is something I want to go and look at. So you can go check that. Using another auditor to perform procedures that will provide the necessary information that the control systems are there. Okay. Now, as regards this type 1, type 2, we have understood, but the user auditor will want to remain satisfied around it. Okay. Because what is the objective? Objective is to get a comfort as around some of these systems, procedures, whether those are put in place or not. Correct? Yeah. So that's the objective in the given situation. Now we'll move on to the next auditing standard, and again a very important one. Let me just quickly get onto that document now. Communication with TCWG. Now again a very important topic, I would say. And as we discussed that these days in particular, there's a lot of focus on this particular aspect. See, as a process, or you can say as a process in relation to the audit, auditor will be required to communicate with the client, or you can say with the company. Now the question arises, who comprises of the company? Okay, company is what? Company is actually but a set of people with whom you go meet, you interact in relation to the audit to be performed. That's how the audit will be performed. Yes or no? Now the question arises that in relation to that audit which is being performed, what is it that the auditor needs to do? Right? So definitely, if you talk about day-to-day interaction, which the auditor, audit team will be having, will be the one which is, you can say, the management. Now, who's the management? Management, you can say, is the senior management. So if you talk about CFO of the company, accounts team, particularly, with whom the auditor will be communicating. But if you look at the control systems, if you look at the financial reporting, so there again, Who has the responsibility? If you look at it from the company's perspective, it is not only the management, it is TCWG as well. Yes or no? It is TCWG which is responsible for that. Now, if that is the case, if TCWG is responsible for that, therefore it becomes important for the auditor to also interact with the TCWG. Yeah, because the one who is responsible for that. So if you don't reach out to them, if you don't talk to them, so how will you understand their perspective? How will you understand their thought process? And how will you be able to get through in terms of various activities which have been completed? Yes or no? Yeah. Now the question arises that if you look at the audit team, so let's suppose audit team has got 10 members or maybe 5 members or maybe say 30 members. Means you have a team comprises of interns, some child accountant, some of them are senior, then you have this audit partner, EQCR. Now in this case, the question arises that are all the team members required to interact with TCWG, and will that be possible for the TCWG to do that? Because who is TCWG? So that's audit committee, that's board of directors. Yeah, so will that be feasible? And is that what is really required over here? It's no, but the audit partner is the one who is expected to do that, including the senior members. So when we talk about the senior members, so many a times the engagement team could be comprising of not only the engagement partner, but also other partners. EQCR is one, of course. Other than EQCR, what you also find is many a time some of the experts who are the partners within the firm. So it could be a direct tax partner, it could be indirect tax partner. IT is a very, very common team, okay, which is a part of the engagement team. So there will always be a partner who will be heading that IT team. So at least these are the ones who should be interacting with TCWG. Okay, so now what are the auditor's responsibility? Responsibility is very simple, that there has to be a dialogue between these two. There has to be a discussion between these two, because in a way, these two are jointly working towards an objective. And what is that? That financial reporting is proper. Yes or no? So there has to be a clear communication channel which should exist between these parties. If that doesn't happen, then definitely it may be a problem. Correct? Now, we understand what is TCWG. Now, question arises whether the following can be considered as an appropriate person. Yeah. So now, company's directors, of course, yes. If you talk about single owner in managing and governance role, yes, of course. Direct descendant of the founder in a largely uh, in a large family owned entity, yes, of course. Member of TCWG where entire TCWG is engaged in, yes, of course. Okay. Now, the question arises that when they interact, there are certain areas which are mandated on the part of the auditor. That this communication should include a communication in respect of those matters, for sure. Okay, what is the first one? Responsibilities in relation to audit of financial statements. So that is about the planned scope, timing of the audit, significant risks, financial reporting framework, management representation letter. Okay, a discussion around that is important. Okay, particularly the planned scope and the significant risks. So I'm not saying others are not important, but I'm saying these are of extreme importance. Why? Because that's how this entire audit would have been, you can say, executed. Yeah, that's how this entire work would have got completed. So that's why it's very, very important for the auditor to look into. During the course of audit, generally there will be some significant findings. Okay, and whether those findings convert into modification or not. If there is no such requirement, there will not be a modification. There may be some matters of emphasis. CAM is a very common thing you find in the audit report. If there are some material weaknesses and significant deficiencies in IFC, identified or suspected fraud that we just talked about, non-compliance with laws and regulations that we just talked about, if at all there are any areas over which there is a disagreement with the management, so who do you go to? TCWG. If there are significant difficulties you have encountered in dealing with the management, so all of these things are important for the auditor to communicate with TCWG. Very, very important. Then the key requirement, right? So idea is not that the auditor will not be independent. So that's why the auditor should explain, see, over this or in respect of this matter, I was not independent. So auditor is expected to be independent, but this clear communication has to be made. Okay. What are the safeguards which the auditor has applied to eliminate the identified threats? So all of these things become important on the part of the auditor to apply. Correct? Now, what are the examples of the matters? So in relation to the accounting policy, acceptable alternate accounting policy, if there is a selection and application of new accounting pronouncement, accounting estimates in particular, it's a very important area. If you remember, even in relation to fraud, we discussed that it's a critical area as far as the audit is concerned. So that's why some of these accounting estimates, which would have been considered by the management in terms of the preparation and presentation of the financial statements, they're important as to what were those, of course, the significant one, and how the auditor has considered that in terms of assessment of the risk as around those areas, whether those have been of the significant risk or not. Then, of course, the disclosures around the financial statements. Any other matter. So if there is a potential impact of significant risk, exposures, uncertainties, if there are transactions outside the normal course of business, corrections of misstatements. Okay. So many a times you find that there were misstatements in the financial statements. Okay. So the set of the financial statement which was provided to the auditor had some misstatement. Maybe the management knew that and now it's been corrected. Or maybe the management didn't know about it. Okay. So it's the auditor who has brought that to the notice of the management and which has then been corrected by the management. That is also possible. In both the cases, what were those misstatements? Of course, the material one. And in some of the cases, there could be some misstatements which have not been corrected and which have converted into qualifications. Okay. So all of these communications should form part of the communication with TCWG. Now, what are the communications that you will see taking place between the management and the auditor and TCWG and the auditor? See, when it comes to the management, any matter which is reaching TCWG would have definitely been discussed with the management. Yes or no? Because management is the one which is responsible for day-to-day matters. So matters arising during the course of audit, including the matters which are communicated with TCWG. So that is something which will always be discussed with the management. Right? But with the TCWG, you will be selective. You will not be talking about everything. That's what we have just discussed. Huh? So therefore, you are talking about significant and relevant matters. And you are not talking about all the matters. Okay. Yeah. So there's a big difference between these two. Many a times there's a thought process that the matters which are reaching TCWG, so that is something over which the management should not be provided any information. So is that a confidential information? No. See, management is a part of the entity and TCWG is also a part of the entity. Yeah. The only difference is that TCWG is not there for day-to-day activity or the event in relation to this audit which is going on. That's why you have management in place. Yeah. Okay. So that's why it's very important that you make the management aware of anything which is reaching out TCWG, because that's how you will expect a proper communication channel to work. Yes or no? Yeah. So idea is not to find faults and report those faults. Idea is to work in a constructive manner both with the management and TCWG, and that's why this communication channel is set up or is required to be set up. Correct? Clear on this? Now, let's try to understand whether these are the matters you'll find to be communicating with TCWG. I would say if you look at some of these matters, of course, yes. Okay, now, I can just, okay, so let's look at this question now. You have been appointed as auditor of ABC Real Estate Private Limited, and you noted the following matter. Okay. With respect to the construction and operation of Aradhya Homes project, there were certain disputes between the company and the customer in relation to the delays in construction and various technical issues. Based on the legal proceedings, the court passed an unfavorable order amounting to INR 50 million payable by the company to the customer. So this matter has been discussed with the management. The company has a board of directors comprising of 3 members and the management group comprising of 5 people. So the overall materiality, if you look at, is 45 billion. So in this case, what do you think? What should you do? Over to you. Yes, tell me. So in this, quickly, yeah. What should you do? Quickly, who will answer this? In this case, what should you do? So in respect of your communication with TCWG, what is your thought? How will you deal with this? Tell me quickly. Manish, Swaminathan, Geetan, Geeta, Gopika. What do you think? What will you do? Any thoughts? So let's look at this, right? Okay, so now, in this case, are there any requirements to communicate with TCWG? If let's suppose the management has already communicated this to TCWG, so you can say TCWG is already aware. Does the auditor need to communicate the same separately to TCWG? The answer is yes, of course. See, considering the matter is significant, it is crossing the materiality threshold. So definitely you would want to apprise the TCWG, irrespective of the fact they are aware or not. As an auditor, you'll want to go and apprise them about it. Okay, right? So, okay, so I think the process of communication, I think we have already talked about it. All right, so now what we can do is, now I think we can move on to some questions. So just give me a minute. Okay, so I think we can now look at some questions. Right, so just give me a minute. Let me just open the questions. And I would request everyone to please go through those questions properly and try to answer. Okay, so let's look at this one. My Decor Limited, which is presently engaged in manufacturing of fabrics. Okay. So this company wants to set up a new plant for manufacturing of special kind of fabric, providing an altogether different texture and feel. This kind of fabric has become a hit with the retail customers. Company needs to set up a plant for manufacturing the above kind of fabric, involving huge capital outlays to stay competitive in the market. Okay. Now, you are the auditor of the company and you find that company's revenue has increased during the financial year 23-24 to 1000 crore from 750 crore. So there's a significant jump. Okay, so if you look at the revenue, there's a significant jump in the revenue. So by the time you started the audit, there was no change in plant capacity. And the information regarding need to set up new plant has become known to you during the inquiry of company's personnel. Okay, so when you performed your procedures, so that's how you got to know about it. Now in this case, discuss how you should proceed to deal with the above situation as auditor of the company, paying special attention to risk of material misstatement due to fraudulent financial report. Okay. So the context has been given to you. Okay. So from the context of a risk that you will assess as an auditor, as around the fraud. And in fact, the good part about the question is the fraud as to which type it is also explained for you. So you can say it's a very, very limited approach which has been set up for you. Okay, so it's already narrowed down for you. So you will not have to do that. The question has done that for you. So now, how will you deal with this? Over to you. Quickly. So if you want to speak and explain, you can raise hand. Quickly. How will you deal with this? Quickly, over to you. So I think Saminathan wants to explain this. Yes, Saminathan, please go ahead. Please pick up.
Yes, sir. See, actually, in the as per SA 240, the
Yes.
perceived risk is always with respect to revenue and the management overhead control. In
Okay.
this case, that revenue is suddenly increased from 750 crore to 1000 crore.
Right.
250 crore is a sudden jump.
Right.
And also is said that the company new setup of the plant is above is not yet started. If new company plant is started means that definitely it will generate some revenue out of it.
Right.
Here there is a question of how the revenue is jumped from 750 to 1000 crore, that is 250 crore. Here is there any next year transaction sales entry is booked in the current year, or any fictitious transaction is recorded, or
Right.
any journal entries is complex journal entries book, like that we need to scrutinize it.
Correct.
Accordingly we have to find out the reason for the increase.
Correct. Very good. Anyone else would like to add to this? Quickly, see, it's important that you attempt these questions, and that's why you are here today, right or not? Yeah. So quickly, anyone would like to add to this? Any more thoughts? So let's look at this. See, the given situation highlights the need for the company to set up new plant for manufacturing of special kind of fabric. Okay. And why is that important? To stay competitive in the market. Now, this is an important aspect here. Now, this will involve huge capital outlay, which could entail financing arrangements. Therefore, excessive pressure exists for the management to be involved in fraudulent financial reporting. Remember, opportunities, pressures we talked about, that when do you have the fraud? When the opportunity will be there, when the pressure will be there. In such a situation, management may be tempted to inflate its revenue to show a rosy picture. So therefore, it's clearly a fraud risk factor and needs to be evaluated by the auditor. Revenues of the company have jumped from 750 to 1000 crore. And the interesting part is there's no change in the capacity of the plant. So how do you achieve such a significant increase? Because eventually, for you to reach this number, you need to have the capacity. So if the capacity is not increased and still with the existing capacity you are able to enhance this, so that can put a big question mark, right? In case of auditor assessing the risk of material misstatement due to fraudulent financial reporting, audit procedures to address such risks would include what? Of course, performing substantive analytical procedures relating to revenue, and then usage of computer assisted audit techniques to identify unusual revenue transactions, and the most important part, testing the controls pertaining to revenue transactions. Okay, that's the most important part around it, right? Okay, now moving on to the next one. CA Ridhima. CA Ridhima happens to be the internal auditor of Trackstore Limited. Okay, so you can say there are some deficiencies in the internal control of the company which have been pointed out by the internal auditor in her reports. So now what are those deficiencies? Receivables are not reconciled at stipulated intervals. Customers are provided a free credit limit based upon their track record. However, no review of customer credit limits is undertaken at required intervals. So that in itself seems to be a problem. Now, statutory auditor of the company finds that no action has been taken by the company on the said deficiencies pointed out in the internal audit report. So in this case, once again, the question remains same. How would you deal with this? Over to you. So in this case, how will you deal with this? Quickly, who will answer this? Yes, Saminathan, please go ahead. How will you deal with this? What do you do about it?
Sir, the internal control auditor, particularly given the deficiency by way of internal control report, internal
Yes,
the thing is that the main here the receivables are not reconciled at stipulated intervals, and the customer provided credit limit. Based on that, also the no credit, no review of the customer credit limit undertaken. The statutory also find the same thing, and the company is not ready to do that. So it's
hmm,
a I feel that as we discussed in that SQC 1 also and 220 also, there is a attitude issue on this here. The acceptance contingency. See, the attitude, they are not ready to correct the mistake.
correct.
And also I could see the receivables are not reconciled, which
Hmm,
means there is a fraud risk factor. If the if it is not receivables is are not properly reconciled,
right.
which lead to there is always the presumed risk over there. And in further to that, the customer credit rating if not reviewed properly, then they can sell the item is more, the limit is not reached. There is a lead to lack of collectibility issues also will be there.
Agreed.
So considering these factor, I feel that these both are the fraud risk factor which need the substantive audit procedure to test it, and test of control also need to be done, sir.
Very good. So anyone else would like to add to this? All right, so let's look at this. See, clearly we can see that the management has not been working anything on the deficiencies. See, there are two reasons you may have for that. One, the management is lethargic. Okay, means they don't want to do anything about it. Okay, so they want to not have the strong systems in place. okay, which is not intentional, maybe unintentionally they are ignoring all of these things, which can put the system or this entire organization to a risk. Or maybe the management is itself involved in some sort of fraud, and that's why they are intentionally trying to avoid all of these things, isn't it? Yeah. Irrespective of whether it is intentional or unintentional, definitely it gives a risk factor which the auditor cannot ignore. Yes or no? And the risk factor is in relation to fraud. Yeah. Why? Because the areas which are under discussion are quite critical. When we talk about receivables, it's an important area in relation to any financial statements. Yes or no? When the management doesn't correct the significant deficiencies, clearly it reflects on the attitude, character, ethical values that allow them knowingly and intentionally to commit a dishonest act. Failure to rectify non-control deficiencies pertaining to reconciliation of receivables, review of credit limits definitely leads to a risk fraud, a risk of fraud. Okay. It may result in intentional typing of companies' funds with risky customers. And there may be a collusion here, which cannot be ignored. So this factor of collusion, you may not ignore. Okay. So therefore, definitely there's a risk of fraudulent financial reporting. So with that perspective, okay, auditor needs to get on to his audit procedures. Correct? Next, FAZ Insurance Brokers Limited is a leading online insurance intermediary. So what is the nature of their business? They are intermediary for the insurance business. So maybe they work through a portal. During the year, Director General of GST Intelligence, DGGI, has issued notice to the company for allegedly creating fictitious invoices for marketing and sales services amounting to rupees 50 crore in favor of non-life insurance companies. Okay, the premises of the company were also searched during the year by DGGI officials. The matter was also informed to IRDAI. IRDAI is Insurance Regulatory and Development Authority of India by DGGI for violation of norms and regulations in this regard. So this is again something they have done. Does the above situation has any bearing on your responsibilities as the auditors of this company? So which company we are talking about? FAZ Insurance Brokers Limited. So as an auditor, do you think this event will require your attention? Outline briefly in the context of possible non-compliance with laws and regulations by the company. Yes, over to you. Who will answer this? Quickly. Anyone? Any thoughts? Yes, Saminathan. Please go ahead.
Yes, sir. In this case, that
Yes.
there is a notice received from that official DGGA, which indicate that there is a suspected non-compliance of this. So, as per the SCA 250, which we studied about that, we need to understand the situation, the circumstances, how that notice is received, and we need to study also. Since it is a notice, we need to check that possible effect of the
Hmm.
material mistake, financial statement, if anything. Then we need to try to do the substantive audit procedure to get that evidence
Right.
for that. And in case if we need any doubt, we can get the legal advice as well. First, we need to discuss with the those charged with governance to
Correct.
understand the reason behind on it. Then,
Right.
if we are not able to solve, then we will get the legal advice as well, sir. I believe.
Right.
Accordingly, we go to decide and report it.
Right. And what about this possible non-compliance? Anyone else? All right. So let's look at this. See, when the auditor becomes aware of existence about the investigations by the regulators, so definitely there is a risk. What is the risk? Non-compliance in relation to any law or regulation. Yes or no? So that risk is there. Correct? Excuse me. In the instant case, notice has been served upon by the company, served upon the company by DGGI in relation to a matter. And this matter seems to be quite serious. Yes or no? Which may lead to penalties and imprisonment. Therefore, it will have a direct effect on the financial statements. Yes or no? Yeah. The matter has also been informed to regulator. So in respect of this company, it's a regulated company, and the regulator for these types of companies in this particular sector happens to be IRDAI. And therefore, what will happen? IRDAI will also get involved. They will also evaluate the matter, and they may also come up with some penalties. Yes or no? In respect of any type of activity. Now, all of these things, whether it's through the GST laws or through ADI regulations, what is the risk? Maybe the financial statements are materially affected. So the auditor should obtain an understanding of the nature of the act and circumstances in which it has occurred and further information to evaluate the possible effect. Right? If the auditor suspects there may be non-compliance, then this matter needs to be discussed with the management as well as TCWG. With the management, no doubt this discussion will happen, but TCWG is something which the auditor will have to think about as to whether this matter is required to be taken up over there or not. If the management or the appropriate TCWG do not provide sufficient evidence that supports that the entity is in compliance with laws and regulations, and in the auditor's judgment, the effect of suspected non-compliance may be material, then the auditor may also need the legal advice. Why? Because if its impact is going to be significant, so either the management will have to adjust that in the financial statements, or the auditor may have to look at the reporting implications. So we are talking about the audit report. Okay, so one of course is the reporting to the regulators wherever required, but one of course is the reporting within the main audit report. Okay, clear? Next, CA Vallabh Sundar is auditor of a leading private sector bank. Now, when it comes to a bank, what is something that you'll see? They are driven by IT systems and controls. Yes or no? Correct? Because the nature of the business of the bank is such. Size of the bank you'll not find to be a small. So no. And they are voluminous. Their business is what? The nature is such that they are voluminous. So that's why they are heavily dependent on IT systems and controls. Control means the IT controls. Now, the same thing. IT systems and controls is under the consideration of the auditor to be reported as CAM due to high level of automation and complexity of IT architecture which the bank is having and its impact on the financial reporting system. See, for the bank, it's quite common. So here again, there are two things. To say that something is common should not be reported as CAM will not be appropriate. And because it's very common, so that's why to say that this will not have some reporting implication will not again be proper. Correct? Now, the question is at what time he should communicate such identified CAM? What are the relevant considerations in this regard and their usefulness? Over to you. Yes, quickly, huh? What do you think? What should the auditor do? Quickly, how should this be dealt? Quickly. Yes, once again, Saminathan, yes, please go ahead.
Yes, sir. I feel here the two standards on auditing will trigger, I believe. This one
Okay,
is that communication with the charge with company SA 260 as well as the SA 701, the key audit matter.
okay.
The thing is that with respect to 260, we have to there is a two-way communication. It has to be on the timely manner whenever there is a significant finding is there and the observation to be communicated. And when we talks about the key auditor matter 701,
Hmm.
when the auditor feels that it is a communicate value to communicate the significant matter, that has to be prepared and it has to be discussed with the those Georgia governors, then only it has to be reported and you should not modify the opinion
Hmm.
altogether. Here in this case the IT system and controls in the consideration they are talking about the consideration to report it in the key auditor matter.
Hmm.
Definitely the auditor can report then communicate to the in the key auditor matter after having that draft report or something to be prepared and discussed with the TGW.
Hmm.
Then based on that it can be reported. It can be communicated via key auditor matter. But the two-way communication is must in either case.
So what do you mean by two-way communication?
Two-way communications means the auditor has to prepare that significant matter, what are the involvement in the IT system and controls over here. He has to prepare in the draft report, and it has to be discussed with that teach W. The teach W also should confirm, okay, you can report in it. So that is what I mean here, the two-way communication.
Okay,
See, I mean that the auditor directly should not report the key auditor matter directly to the financial statement without
right.
communicating to the TGW.
Okay. All right. Anyone else? So now, say 260 talks about this communication with TCWG. And we have this SA 701, which deals with CAM. Okay. Now, as regards CAM, what will happen? Auditor may communicate preliminary views about CAM when discussing the planned scope, timing of audit, and may further discuss such matters when communicating about audit findings. Now, is CAM a matter which the auditor is required to report to TCWG? No doubt. See, the moment you call it as CAM, you are calling it's a key matter. Yeah, means it's of importance to the auditor. Now, generally around CAM, there's a misconception. What is the misconception? That it's an audit finding, it's an audit observation, it's an audit issue, or it's a negative reporting, which is not true. See, by calling a matter as CAM, you are not saying that it's a problem in the organization. No. You are only trying to highlight that during the course of your audit, what are the matters that you faced which required significant efforts or which were of challenge to you as an auditor. So you are not saying its outcome wasn't wrong and that's why I'm reporting. No. So you are saying this entire process was complex or involved significant efforts. Yeah. That's why you want to highlight this. Yeah. So that's the thought process as around CAM. And the same thing, because of the reasons we just discussed, is what the TCWG also needs to be aware of. And that's why to say whether this matter needs to be reported to the TCWG, answer is clearly yes. Okay, clear? Now, communication with TCWG recognizes their important role in overseeing the financial reporting process and provides the opportunity for TCWG to understand the basis for auditors' decisions in relation to CAM and how these matters will be described in auditor's report. Okay, so TCWG will get a perspective around it. It also enables TCWG to consider whether new or enhanced disclosures may be useful in the light of the fact that these matters will be communicated in the auditor's report. Okay. So let's look at the next one. There are 4 audit firms: GPR and Company, MKS and Company, CY and Associates, DS and Associates. So these firms have been appointed as statutory auditor of KNB Bank. So it's a public sector bank in accordance with regulatory guidelines. So the professional work was divided by audit firms. So it appears to be a case of joint audit. Yeah, clearly. So the professional work was divided by audit firms on the basis of zones of the bank. Yeah, so any basis they can follow. However, the work relating to IT systems and controls. Now, once again, because we have a bank involved, so that's why we cannot ignore this aspect of IT systems and controls. Yes or no? Yeah. So this will play an important role. Okay. So the work relating to IT systems and controls was not allocated by them due to its very nature. While planning for the above common work area, it was decided to test IT general controls, IT application controls, and IT dependent manual controls. Okay, so you can say that it's a common area the way it's been planned. So it has been kept as a common area. Planned key audit procedures relating to this common area also included testing the design and operating effectiveness of controls, which is again very important, and this is something you'll do for the control. Design and operating effectiveness. Yes or no? Over what? Computer operations, including the backup, batch processing, data center security. Okay. Now, actual audit procedures pertaining to testing controls over batch processing were performed by the team of DS and associates only. It appears only one firm has done this, others have not done this. In case work in relation to above audit procedures is not performed professionally by DS and associates. Okay. Discuss where responsibility for such lapses would lie in line with the auditing standard 299. Yes, over to you once again. And I would request everyone to please try. Okay. So it doesn't matter whether your answer is wrong or right. At least try this. Yes, quickly.
Yes, sir. So as per SC 299, joint
Yes.
audit of financial statements work are divided among the auditors. But
Okay.
in this case, this testing control work is not, means IT work is not divided among them.
Okay.
So all are responsible for this.
Okay. So even if there is a lapse on the part of single auditor, we are saying all will be responsible. Great. I think Saminathan would like to add to this. Yes, please go ahead.
Yes, sir. Sir, with respect to here, in the question is talks about testing, design and operating effectiveness of the controls of the
Right.
system. It's jointly they planned it as a common area.
Right.
But as respect to that testing controls over the
Right.
batch processing, the responsibility is allocated to the DS associate.
Okay.
So the labs, if anything is pertaining to this, the wholly responsible by the D is associated with respect to testing controls.
Okay.
For others, since it is a jointly shared the responsibility, it's a jointly and severally responsible for other items.
Right. All right. Anyone else would like to add or maybe having a different thought? So let's look at this. Okay. Yeah. See, in respect of the common areas, joint auditors are only responsible for appropriateness of nature, timing and extent of planned audit procedures agreed upon them. Responsibility of individual execution lies with the concerned joint auditor. In the instant case, audit procedures relating to testing the design and operating effectiveness of controls over the computer operations have been planned jointly, as it's a common area. However, audit procedures relating to testing controls over batch processing, okay, were actually performed by the team of DS, although these were planned jointly. In case of any lapses in performing such procedures, therefore, who will be responsible? DS would be responsible. So let's look at the next one. A, B, and C are the joint auditors of a company. Okay. B is of the opinion that there are material misstatements in the financial statements of a company which, if accounted for, would turn the profit reflected in the financial statements for 25 crore to a loss of 5 crore. So you can say the impact of the material misstatement is quite significant. He therefore wants an adverse opinion to be expressed in the audit report. However, A and B do not concur with his views. So now this is again one area you may find. Okay, they may have different views. In this case, what do you think B should do? Or what do you think will be the course of action? Is B required to go by the majority opinion? So do you think majority will prevail? Or do you think there's some course of action which is suggested? That's how it should be dealt. Yes, over to you. What do you do in this case? Yes, Saminathan, please go ahead.
Yes, sir. Here the ABC are the joint auditors. The
Right.
B is disagreeing with the particular items, and the majority they want to give A and C. They want to issue the report. Here in this state there is a disagreement between them. It's very clear. When there is a disagreement, the auditor B can issue the separate audit report.
Right.
And the majority people that the A and C, they can issue the audit report also separately. Right. But when the B is issuing that audit report,
Right.
he has to cross reference to the matter on his audit report that we studied under SC 706 that emphasis matter paragraph and other matter paragraph. He has to mention in the other matter paragraph as well.
Okay.
About this joint audit reference.
Right.
This is what he is. That is what I feel the answer on this.
Sure. Good. Yes. Anyone else would like to add to this? Any more thoughts? All right. So let's look at this one. Where the joint auditors are in disagreement. So what do? They shall express their opinion in a separate audit report. A joint auditor is not bound by the views of majority. So there's no such thing that majority will prevail. Okay, and whatever majority will decide, all the joint auditors will have to do this. No. Okay, there is no such requirement. In such circumstances, when the joint auditor will give the separate audit report, audit report issued by the joint auditors shall make a reference to the separate audit report issued by other joint auditor. Further, such separate audit report shall also make a reference to the audit report. So idea is what? Idea is to link these two. So there should be a referencing so that the users, when they go look at the audit report, so they should not be looking at only one. They should be looking at the reports which have been issued. Okay. And under what heading you will do this? Other matter paragraph. Okay. Now, let's look at the next one. CA Shelley Goel is offered appointment as auditor of Root Limited. It's a listed company. Audit committee of the company wants her to justify independence in relation to company through proper communication. Yeah, which is a standard procedure. Although she has ensured that there are no threats to her independence, she feels the requirement of audit committee to be beyond its purview. So the thought process of the auditor is that this is something which the auditor needs to take care, and it's done. For the audit committee to come and ask is not appropriate. Okay. So that seems to be the thought of this auditor. What is your opinion in this case? Yes, anyone? What do you do in this case? What is your thought? Do you think audit committee is fair in asking about this? Do you think auditor is right? Yes, Swaminathan, please go ahead.
Yes, sir. That audit committee also will check that independence from their side as well, sir. Not only from the auditor side.
Right.
So they have done their duty. That is what I feel on this.
Okay, so when you say that audit committee will ask from, will do this from their side. So does it mean that the audit committee should not be asking for this?
Yes, sir. They can ask for that, sir.
No, again, it's about they can or they will want this.
They want this. It is also
Yes.
their primary duty to do that. Independent
Correct.
check.
Correct. In case of listed entities, audit committee is what? It's a mandate. Okay, and that's nothing but a TCWG. So a statement that the engagement team and the others in the audit firm as appropriate, including the firm and when applicable, the network members of those firms have complied with relevant ethical requirements regarding independence is something which is a mandatory communication by the auditor to the client. And who is the client? Who is the one at the client place who is going to look at it? It's the audit committee. Yeah, so that's why they are fair in asking this. Okay. All the relationships and other matters between the firm, network firms, and the entity that in the auditor's professional judgment may reasonably be thought to bear on the independence. This shall include total fees charged during the period covered by financial statement for audit as well as non-audit services, if any, provided by the firm, as well as network firms to the entity and the components controlled by the entity. These fees shall be allocated to categories that are appropriate to assist TCWG in assessing the effect of services on the independence of the auditor. And related safeguards that have been applied to eliminate the identified threats to independence or to reduce them to an acceptable level. Okay. Further, as per the Companies Act, audit committee is required to review and monitor auditors' independence. Okay, so that's why, as far as this audit committee's requirement is concerned, this is completely fair and this is something which is mandatory. Okay, so they are only trying to do their duty by asking for this. Okay, so the thought process of this auditor that this is not fair and audit committee is asking for something which they are not supposed to obtain is not appropriate. Okay, next. CA Anand is the engagement partner for audit assignment of NHT Limited. So this company is engaged in manufacture of iron and steel bars. It has its plants in the state of Sikkim. While verifying the wages record of the company, CA Anand found that maximum of the labor employed in the plants was child labor. He questioned the management of the company about the same, to which the management replied that looking into the compliance of any such law is outside the scope of his financial audit. So they are saying that you are required to look at anything from the perspective of financial statements. Okay, so to get into this assessment, this is beyond your scope. Okay, so this is not something you should do. What do you think? Do you think management is fair in limiting the scope of the auditor in a way, or to say that auditor is going beyond the scope, not really a limitation, but to say that he's going beyond the scope is appropriate? What is your thought? Yes, Saminathan.
Sir, as per SA 250, that auditor objective is very clear. It stated that when there is a direct effect with
Right.
respect to financial statement of the laws and regulation, wherever possible, say example GST, it is a direct effect. He has
Right.
to get the sufficient and appropriate audit evidence to give the effect for that.
Right.
Whenever there is no direct effect, which means the material effect, the other
Right.
laws and regulation,
Right.
which means here they rightly talks about the labor, child labor, which
Right.
will come under the material effect. When there is a
Okay.
material effect, is that the auditor has to get the he has to put the a special procedure to get that evidence for that. Then
Right.
accordingly, he is responsible to report in such a cases. In this case, he has to, that management intention is not right. So he has to check that child labor activity when there is a material effect. Accordingly, he had to report as well. The reporting also he need to take care as per the reporting standard.
Okay, so you mean to say that the auditor is right in terms of getting onto this assessment, is it?
Yes, sir. Yes, sir. I feel that if there is a material effect, definitely he will modify the report as per SCA 705.
Correct. Now, if you go by SA 250, auditor is not responsible for preventing non-compliance and cannot be expected to detect non-compliance with all laws and regulations, which is fair. But the auditor is responsible for obtaining reasonable assurance that the financial statements are free from material misstatement, which could have been resulted due to any sort of misstatement. So while doing this assessment, auditor will also be looking at the applicable laws and regulations. Yeah, because if the applicable law and regulation has not been complied with, and that is resulting into a misstatement, and that is material. So will that be a concern to the auditor? Answer is yes. Okay, so the answer is yes. Now, in the given case, maximum of the labor employed in the plants of the company was child labor. Now, for an auditor to ensure as to whether any penal provisions will be there for such non-compliance is important. Why? Because such penal provisions could have a material effect on the financial statements of the company. Yeah. And also whether the same has been disclosed by the company. Yes or no? Yeah. Now again, it is something which is based on materiality. And please remember that materiality is not quantitative always. Materiality is also required to be looked at on the basis of qualitative factors. Okay. Next. Magnet Interiors Limited, a listed company engaged in the manufacturing of office furniture. So it has its activities divided into 4 geographic regions. Okay. So what the company has done is they have appointed 2 joint auditors, AB and company, CD and company, to conduct the joint audit of the financial statements for the year ended 31st March 24. Engagement partners from both the firms, CA Amar and CA Chaitanya, along with their audit teams, had a meeting to discuss the areas of work to be divided and their respective responsibilities. You are required to explain the responsibilities of the joint auditors. So I think this is more of a generic one, quite standardized. So let's look at this quickly. We have already discussed about it. All the joint auditors shall be jointly and severally responsible for what? Audit work which is not divided amongst the joint auditors and carried out by all the joint auditors. Decision taken by all the joint auditors under audit planning in respect of common audit areas as around nature, timing, extent of audit procedures. Matters which are brought to the notice of joint auditors by any one of them and on which there is an agreement. Examining that the financial statements of the company comply with relevant statutes, presentation and disclosure requirements, ensuring that the audit report complies with the relevant requirements. So if at all there is any matter which is relevant to the areas of responsibility of other joint auditors and which deserve their attention or require disclosure, requires discussion, so the said joint auditor shall communicate the same. So you should not be thinking that this is not something I'll not do, not the area of my concern. No, eventually it's the audit of financial statements of a company only. Yes or no? Yeah. It is the individual responsibility of each joint auditor to study, evaluate the system of internal control, assessment of risk related to the areas work which are allocated to the said joint auditor. As regards the decision which are taken by all the auditors under audit planning, all the joint auditors are responsible only in respect of appropriateness of the decisions concerning the nature, timing, extent of audit procedures. Okay, right? Next. UVW and Associates. They are the auditors of Moon Limited, which is a listed company, and the reporting year is 23-24. CA Udhav is the engagement partner for this audit assignment. He was of the understanding that as per the requirement of one of the auditing standards, he has a responsibility to communicate following matters to TCWG. Auditor's responsibilities in relation to audit of financial statements, planned scope and timing of audit, auditor's independence. Okay, so as per the understanding of this auditor, so he thinks these matters are required to be reported to TCWG. Okay, which is a fair understanding. It appears that his thought process is fine. So as far as these matters are concerned, should these be reported? Answer is yes. Okay. It appears there are some more matters which should also go out to TCWG. Okay. So it's not about accuracy, it's about completeness, which is the problem. Yeah. So which of the matters you believe are not included? Discuss such matters in detail. Yes, over to you. Over to you. Yes, Saminathan, please go ahead.
Sir, they discussed about audit responsibilities. That's fine. Planned
Right,
scope and time and auditor independence also fine.
right,
I feel this is not only that we have to discuss that accounting estimates, accounting policies, and that significant and difficulties matters if any, and also um, yes, sir. On the key auditor matter also,
very good.
whenever they find it, that
Right,
also they will discuss.
correct. Very
And
good.
moreover, we will get the written representation also from them. Is there anything else is not missed out from the management side as well?
Right,
Moreover,
right. Okay. Anything else? Anyone else who would like to add to this? All right. So now I think the question is quite straightforward. It is just asking you to report on the matters which should be communicated by the auditor to the audit committee. Okay. Now, what are those? See, of course, any significant difficulties if encountered during the audit. Yeah. Significant matters as around the accounting estimates, financial statement disclosures, written representations which would have been obtained. Again, a very important communication. CAM is one. If there are any sort of qualifications, any sort of modification, okay, any matter which is in the nature of emphasis of matter, misstatements which were there which have been corrected, again material one, misstatements which have not been corrected, again material one. All of these are what? All of these are important communications which have to move out from the auditor to the TCWG. Okay, yeah. So let's look at this one. Studio Limited appointed RST and XYZ as joint auditors. So it's the year ended 31st March 24. During the audit, it was observed there is a significant understatement in the value of trade receivables. Right? The trade receivable valuation work was looked after by RST and Associates. However, there was no documentation outlining the division of work. Okay. Comment on the above situation with respect to allocation of responsibilities. I think we have talked about this quite a lot, right? So there has to be a proper coordination. Yeah. Each joint auditor is only responsible for the work allocated to him. And they are jointly and severally responsible for some of the things that I think already discussed. Okay. Yeah. So in the given case, if you look at the requirements of the joint audit, there is a significant understatement which was looked at by whom? RST. So RST will be held responsible for the same. Okay. Next, let's look at this one, last one. During the audit of Indo, CA Harish observed that processing of accounting data was given to a third party on account of certain considerations like cost reduction, on computer working to full capacity. Indo used a service organization to record transactions and process related data. What factors should this CA consider regarding the nature and extent of activities undertaken by service organization? Okay, and if so, to assess their effect on the audit risk, discuss with reference to relevant auditing standard. I think this is all about service organization that we have discussed. Okay, so now in relation to the service organization, what should the auditor do? Auditor will have to evaluate the service organization, and for doing that he will look for some reports as around those controls which he needs to obtain. So that's how he'll go about it. Correct? Yeah. All right. Good. So then I think we are done with this. Now, any questions, any doubts that you may have, we can have a discussion on that. Otherwise, we are through. No? All right. So good. Thanks everyone once again for your time today and for this wonderful participation. Thanks so much. And again, we have CA Karuna ma'am. Over to you.
Thank you, Achal sir. Thanks for a wonderful session. And indeed, it was a great session where students learned a lot about the engagement and quality control standard section 1. It is very important and difficult, and students find rather difficulty in understanding the requirement of the questions, right? So dear students, I hope you are regularly, thoroughly studying the engagement and quality control standards, not with any shortcut type of things. You are doing in-depth study and practicing the questions and writing the question and evaluating whether we need to improvise, right? That is very important and crucial for the success and understanding the requirement of the standards. And Achal sir is making you explain that how you can interpret what is the requirement of the question and how you should answer. So if you have any feedback, please feel free to share, and rather your feedback is very, very important for us to improvise in the further more sessions, right? So with this, thank you very much, Achal sir. Thanks a lot, technical team. Thanks a lot, BOS support team. Thank you.
Thank you. Yeah. All right.
Yes, thank you. If any student have any doubt, that you can tell us definitely. Okay, thank you. Thank you, Geeta.
All right,
thank
thanks.
you, Saminathan. Thank you, Achal sir.
Thank you.